Hey, what's up? What's up, everybody? We're going to be starting in 6 minutes with Chief Market Strategist Matt Maley. Okay? 5, 6 minutes. We're going to get started with Matt Maley, Chief Market Strategist, and of course, lead trader at the Benzinga Stock Picks Inner Circle chat room. A lot of you guys know him from CNBC or Bloomberg. He's a very busy man, especially being in the chat room Monday to Friday, 9 to 5, trading with you guys. So he made a great effort here to be with us. So we're going to be for about an hour or two, maybe, going over trade ideas, education, market discussions. It's going to get spicy. Okay. Packed session today. Don't miss it. 5 minutes. We're going to get the ball rolling, guys, and we're going to get things going. Any questions, use the chat. Use the chat, all right, on the YouTube side. And we're going to get started in a few minutes here, folks. All right, ladies and gentlemen, welcome to the session here that we have for you today. We have Chief Market Strategist Matt Maley, Chief Market Strategist at Miller Tabak, lead trader at the Benzinga Stock Picks Inner Circle chat room, 40 years of experience in Wall Street, everything from Solomon Brothers to Merrill Lynch. And a lot of you guys already know him from CNBC or Bloomberg interviews that he does all the time. If you were not aware, Matt Maley has a live trading room here with Benzinga, and it's amazing. You have to try it. But I believe we have Matt ready to go. Let's go ahead and bring him on here. Big warm welcome, Mr. Matt Maley in the house. Let's go. Hey Matt, how you doing, man?
I'm doing well. Great. I should slide this over here. Sorry. Crazy markets right now. Today was actually, it's kind of funny. It was the tightest range in the S&P 500 of the entire year. Why? Because everybody's sitting on their hands in front of this big employment number that comes out tomorrow. We also have a big inflation number out next week. So we got a lot of things that people are really focusing on. And it was funny because we had this big rally coming up, last week and a little bit into this week. And then everybody wanted to sit on their hands, and makes total sense. But this is going to create some unbelievable, I think, some great opportunities in the next day. We've already set up for some moves tonight in our chat room for what I think will be a big move tomorrow. And it's funny because I'm not exactly sure which way it's going to go. I think it's probably going to go down. That doesn't mean it's going to go down and go down for forever. In other words, go down, for the next 3 weeks or anything. But I do think it's set up for a pullback. But we set up to take advantage of it through a very easy option strategy. We usually do options that are basically straight puts, straight calls. That's it. But sometimes we do get some straddles and strangles, and what that does is take advantage of a big move one way or the other. When you get one of these kind of critical junctures in the market, I think that's where we're sitting now. But then as we move to next week, we got the big inflation number, and more earnings reports will come out, especially out of the retailers, which can be very important. So even though it's the month of August, the dog days of summer aren't taking place this year, and I don't think they're going to take. They haven't so far. Today was one day of it, and I don't think we're going to see much of it in the rest of the summer.
Before we get into this, because look, man, we have a packed session, so all you guys, lucky you. But before we do get into that, Matt, because I mean, I know your background, I know you have a great track record, but for those that maybe are watching maybe this for the first time, if you could just give us a brief background of your experience in Wall Street, I think it's very important to know, the person behind the trades, of course.
Yeah, again, I've been here, as Rodrigo said, for about 40 years. Be 40 years in November. I started the Monday after Thanksgiving, and this will be. And the thing that's different for me is, as a market strategist, and most market strategists were either former economists or former industry analysts, and there's nothing wrong with that. But my background is in trading. And I spent 25 years on the trading desk of Solomon Brothers and Merrill Lynch. Now, Solomon Brothers, back in the day, if you're younger, you've probably never even heard of them. But there is a great book, if you ever get a chance to read it, called Liar's Poker, about the heyday of trading back in the 1980s and 1990s. And that's when I was there. 15 years at Solomon Brothers. We were the biggest trading desk and most important trading desk on Boston, in the business. I mean, even more so than Goldman Sachs, and much more than back then the J.P. Morgan or Morgan Stanley, who were just really more in the investment banking side of things. Lehman Brothers was another big trading house at the time, but we were the biggest. And so, but the thing is, when I was there too, for 15 years, I covered the biggest hedge funds, the biggest mutual funds, big banks, insurance companies, etc. Endowments, etc., the biggest endowments in the world. And so you worked on these trading with the trading desk of these incredibly sophisticated institutions, and you really learned what was really going to happen, not what would theoretically happen. And that's what a lot of these strategists really dealt with. And I did the same thing when I was at Merrill Lynch for almost 10 years, so about 25 years of trading experience. And like I said, this whole thing about what I think is going to happen 3 to 5 years from now, that is important. You want to have that kind of view. You also want to have a view for 6 months out. And especially for that one bucket, that bucket of investments that you're, For some of you, that's 3 to 10 years out. For other people, it's 30 years out, and depending on how old you are, and that's good. But if you want to really benefit and maximize your returns, and you have the interest, you can have that other bucket that trades a little bit more actively and takes advantage of the shorter moves on what is actually happening. And my biggest, one of my favorite sayings, it's my saying, I made it up, is like, the people on Wall Street always say the market is always right. Well, that's not true at all. The market is wrong all the time. It's only always right eventually. Okay, we saw that you could go a million times at the bottom in 2020. Was the market right? Of course not. When the pandemic bottom, was the market right at the top in 2007? Of course not. And you could, it's individual stocks. It was the market right if a stock opens, reports earnings and a stock opens down 20% or up 20%. Means the market was dead wrong. That's why we trade. That's why we get these opportunities. All these guys. Again, there's nothing wrong. In fact, it is good to have that long-term one where, hey, Apple Computer is going to go down 10 to 15% 5 times this year. I don't care. I'm going to own it forever. That's great. But you can also trade around it, which we've been able to do, and not just trade around that trade, that position, but in some cases, it's just like, is a thing I don't even trade. I just put it away. I'm going to let it sit there for the next 20 years, and I'm great. But you can trade around other short-term stocks. I mean, there may be a stock. Hey, I don't like this stock very much at all on a long-term basis. They're in a business that's going, it's fading. But I'm telling you, the stock's way oversold. It's way overhated. The sentiment stinks. It's overshorted. I'm going to get into this thing, and you bounce it, and off it goes. And so so you can take advantage and see. And again, when you do it in the options, you can make several 100%, which I'll show you some things that we've been able to do on a very consistent basis this year. We've gotten really big home runs and some grand slams as well. But the whole point is we're trying to is tell you what's really happening in the world, not what should happen. And that's where trading really comes in, and that's why we've been able to be successful in this chat room.
Right. Matt, are you able to share your screen down there? You see a button that says share? Let
me just grab it here. Oops. Okay, mute, stop. Oops, hold on a second. This is a new system. I don't see share screen on this new system. I'm sorry. Hold on. Yeah, I just don't see it there. I don't know what to tell you. The old system, I knew where it was down at the bottom. It's not, I don't see one here. Mute, stop, can, settings, share. Oh, what am I talking about? It's right there, right in front of me. Sorry, buddy. Okay. Right in front of me.
Okay, we're good then. All right, cool.
Okay, my apologies. It was sitting right in front of my face. Open system. Let's see. Okay. Let's see. Bang. This is what I want. Okay, sorry about that, Rodrigo. It's completely my fault. It was staring me right in the face. It was just it's just a new setup we have here, and so I wasn't. I was just looking in the wrong place. Hold on 1 second.
All good, man. Yeah, no worries. You got it.
Can you see my screen?
No.
Oh, you can't. Okay,
not yet.
Oh, okay. I thought I. Okay. Hold on. Let me. Where are we? Okay. Share. How about now? Still no?
No, I don't see. I'm not sure what.
Let me try it again. Slide. Share screen. Share screen. Entire screen. What did it hit? Entire screen. Share. Window. Okay, hold on. Let me see here. Okay, that's okay. I selected that. Where is this thing? Oh, I see. Okay. Okay.
You got it?
Hopefully you have it now. I'm so sorry. You see it, bud?
Guys. Yeah. Apologize, guys, for the
Yeah,
for
it's
not.
very, very sorry, but believe me, that boring two or 3 minutes, you're gonna believe me, we're gonna make up for that in a big way in the next hour or more. Okay, we got a lot of stuff to talk about because this market is not just the market. There's going to be the market is such a critical point. I'm quite concerned about the marketplace right now, but I'm telling you, one way or the other, this market's going to move. And even if I'm wrong, I'm going to take advantage of it to the upside. And I'm prepared to do it. I'm going to show you a number of different issues, whether it be the S&P, the Nasdaq, the bond market, and of course, if it's going to be the S&P, if it's going to be the Nasdaq, that means it's going to be tech stocks in a big way. It's going to be the biotech stocks, some of these healthcare names. If it's the bond market that really moves, it's going to be the and they both could move. Then it's going to be the bank stocks in either direction. So we got a lot of stuff that's going to be happening in a couple of weeks, even though the earnings season is starting to wind down a little bit. So again, I apologize for that. Fat thumb. I just again, this is the new system for me. It'll take just wasn't quite used to it yet, but we got lots to talk about, and I'm going to show you a lot of it right now. So first, Rodrigo, do you want me to go over to some of the trades we've done, and then we'll talk about what the opportunities we have? How's that? A good play. I think that's what we'll do. Okay, well, that's one that. Let's just go here. I just want to give you some ideas of what some of the things we've done just in the last couple. I used to go way back, but we'll go back. Okay, here we are. No, let's go back further because I want to go even into May. Okay, good. Okay, now don't worry, I'm gonna blow it up so you can see it better. Don't worry. Here we go. Okay, good. Okay, great. Okay, good. Here we go. Now I'm going to blow it up for you. Here's the thing. I just wanted to go back to May. Okay, and I'll just go through these real quickly. But these are some of the things we've done. Where in just a given day we came in here. The SQQQ. People knows what that is. That is the inverse 3-time leverage inverse ETF on the QQQ. And the QQQ, of course, is the Nasdaq 100. The NASDAQ 100 index. And so the QQQ. So here we came in late in the day. Remember, it was Friday the 13th. And whenever I do trades, whenever I do a specific trade, you always know about it. I don't trade without, if I do a trade, you immediately know about it. I don't tell you about it later. I don't tell you about half of my trades. I tell you about all of my trades. And we give them very specifics. In this case, it was the SQQQ. Remember, I talked about that. That's the inverse ETF. And we buy the exact strike price, May 13th, okay? The $55 calls. And remember, since it's an inverse ETF, the calls are actually a bearish bet. And we came in on the 11th, which is Friday the 13th. I was going, Friday the 13th, getting worried here. Wednesday that day, the market was getting overbought on a near-term basis. I came in and let's take a chance here. Let's buy these things. And sure enough, we bought them on Wednesday in the last 2 hours of trading. By the opening the next day, they had more than doubled, up 116%, and we got out of them right away. Now, I just want to show you that the timing worked out really well. We didn't get the exact top. It would have been better if we got it in the morning. But, that's the thing. You can't worry about that stuff. You can't worry about every little thing. Okay, the same time. Okay, remember when I said, well, geez, if I'm going to buy the let me go back. I'm sorry. So what we did here, this was the 11th, right? And then it got to the 12th, and I'm like, hey, this market, this sell-off isn't right. It's for all the wrong reason. So we came in and bought the TQQ calls. Remember, this is the 12th. Okay, back here, if you can see down here, see down here, this is May 11th, May 12th. We bought them on here in the morning, late in the afternoon, sold them in the morning. Later that day, the TQQ calls, now those are the bullish 3 times levered ETF for the QQQ. So the calls are a bullish trade. So later that day on the 12th, after we had taken the profits back here, we came on the SQQQs, we came in the last hour of trading, bought the May 13th calls, but we bought them on the 12th instead of the 11th this time, $29 call options. Look what happened. Morning market opened strongly. We sold them, didn't get got pretty darn close to the exact low that day. Got 600% the next day It did go a little bit higher, but we did very, very, very well. If you make 600%, you're worried mad that you didn't make 650, you'll never do well in this business. You'll drive yourself crazy. That's just when you get those things, you take them and move on. Here's another situation that we happened in May. I'll move into much more recent ones very shortly. But here's, again, we try to look outside the box, not just the normal stuff, every little thing. What I noticed was during May, we saw the situation where the high yield market was getting, the crypto market was getting absolutely crushed. And there was a major league margin calls. So when the margin calls came, they couldn't, those markets were too illiquid. They couldn't sell enough crypto to meet their margin calls. So what did they do? They went to what they did own that was very liquid, and that was tech stocks. I mean, the people who bought, who owned cryptocurrencies, especially back in May when it was acting so well, or it had been acting well, and they're like, well, those stocks they didn't own General Motors, they owned Apple, okay, and Microsoft in these stocks. And I noticed that Apple had fallen 10% as the market was getting clobbered, as the crypto market was getting clobbered, and the stock market was holding up okay. And Apple was down 10%. It was no new news on Apple. I'm like, wait a minute. Apple can go down and bounce around and go down for any reason at any given time. But 10%, there has to be news. Well, there wasn't any news. So I knew what it was because from my experience, from something that happened back from long-term capital management 20 years ago, more than 20 years ago, I realized that they were using Apple Computer as their source of funds to raise money to meet their margin calls. So we came in at the end of the day. Finally, I saw that the forced selling, the margin calls were ending in the cryptocurrency market. On May 12th, we came in. Remember how we bought the TQQQs calls? We also bought some Apple Computer calls. Again, I wish we had held on to a little bit longer, but 400% in one day, I think take that every time, all day long, right? So that worked out really well. I guess going to move on here. These are some months later in the year. Later in that month, we made 98%. And then another one we made 174%. This was just on the regular QQQ calls. We'll see. So why do you do SQQQ? Why don't you always do SQQQ or TQQQ? Because they're levers you can really get. Well, because they only expire once a week. So the QQQ calls, along with the S&P and the IWM, which is the S&P 500 and the Russell 2000 ETFs, those expire 3 times a week. So if you think you've got a really good idea that this thing's going to really bounce or really sell off on a very short-term basis, you don't have to go all the way out to a Friday. You like to buy the TQQQs later in the week. But if you do see a big move going to happen right away and it's on a Tuesday, you have to pay extra to go out to Friday because it's the time value. So you go ahead and just buy the Wednesday. And this is what we did here. And we bought these in one afternoon. We don't usually do it here. We just do it in a couple hours. We made 174%. And again, I just want to go on to and then as we moved into June, this was one, it's interesting because on this, the one thing, before I go on, I'm going to a couple more here, and then we're going to talk about what's really going on in the markets and why I think we have a lot of opportunities coming up, a lot more opportunities coming up. But this was a thing that this was Amazon calls. This was not something I got involved with. This is some other people in the chat room that got involved with. They asked me how it looked. I said, it looks really good. I was a dope. I didn't go into it. They did. They made a fortune, did very, very, very well. And I'll show you that in a second. But the point of the matter is that today we can make this, we have the tools for individuals to make these kind of trades. We didn't have those before. All of the options were quarterly, okay? And they were all on individual stocks. They did have, I shouldn't say that. There were some there were very liquid ones on the S&P 500, but they were all quarterly options. So if you bought one now, it's like, well, I've got to go out to at least September. Okay, that's a lot of time value you've got to pay. If I think, again, that's funny. It's like, hey, geez, I don't think this is going to happen. It's going to happen over an extended period of time. Great, then you do want to go out that far. And you still have that opportunity today. But now, if you think something's going to happen over the next few days or the next week or two, you don't have to pay that big time value. You can just go out for all the major stocks have weekly options. Many of the intermediate size stocks, mid-cap type stocks have weekly options. Okay, all of the major ETFs. So if you want to make a bet on a group, they all have weekly options. And as I mentioned, the index options are 3 times a week. So it gives us much more opportunity to take advantage of short-term trades and not have to pay that huge premium. And that's where you can get these turns. Now, this is a situation which happened in Amazon. Again, just to go back, we used to be quarterly options. The only people who could do it was institutions. But 2018 it got a little bit better, 2020, but now we're in this incredibly volatile market. We can make the same kind of bets that the institutions, who were the only ones who could do it because they were able to do it in the over-the-counter market, which firms just wouldn't do for it. It wasn't profitable enough for them to take the risk. And I can go into that, but that's just neither here nor there. The point is we have these tools and we can take advantage of it. Now, this was the thing with Amazon. Well, one of our, really, really bright people, there's all really smart people in the chat room. And again, there's not like 10,000 people in there. There's not 20,000 people in there. It's a small group of people. We really help each other. But she came in and said, hey, the last time Amazon split, the stock really took off. I'm going to buy these calls. Well, sure enough, they bought them. Some people sold them here for 500%. Some people, now again, I don't know. Since I didn't play on it, I don't know the exact levels. But then obviously, theoretically, and I think some people did. I know some people made more than 1,000%. 1,000%. Okay, hello, 10 times your money. Okay, that's really nice. And this is and again, theoretically, they could have made as much as 1,500%. And we've had some other. And again, we do it with individual stocks. Early in June, we came in on AMD, was getting oversold. We came in and bought those one morning, and then the next day, the next day we sold them for 146% gain. Again, later in the June, again, the SQQQ goes back to these. And the reason, why do you do the SQQQ more than you do the SPYs, the S&P? And the reason is that the triple Qs tend to be more volatile, so they get bigger moves and you get bigger profits. Here's another one where we came in where the market had been was getting overbought. Remember the calls on an SQQ is an inverse ETF, so it's a negative bet, 400%, and just one in one afternoon. And here again, sitting on 500% because this was a situation where I wanted to go over the weekend. Okay, so go back here. This was the 9th through the 10th. All right. Where we made 400%. At the end of the week, I thought, geez, the market had jumped up and popped at the end of the week. I want to buy and make a really short-term play. I think this market is way overbought. It's going to sell off. So so instead of going out a full week and buying the TQQQs, I bought the QQQQs that expired the next day, Monday. Okay. So I'm sorry, the next trading day, because this was Friday the 10th, and then 11th and 12th was Saturday and Sunday. And then Monday, we came in right at the opening. 577%. We bought them almost at the bottom, sold them here. The thing is, it's like, oh, why? Yep, I could have made a lot more. But again, if you're mad about making 577%, be my guest. Here's another one where the XLE. I mean, here's a great call that we made again in June, in the middle of June, where the XLE. Just trying to show you here how we do some in options. We do advanced micro devices and Amazon, individual stocks, and here's some ETFs that have worked out really well. Where I had been wildly bullish on the energy stocks long before anybody else, and we'll talk about that in a few minutes. But I was wildly bullish going way back to October 2020. Before everybody else turned bullish in early 2021, after so they missed half of the move, okay? And they're all patting themselves on the shoulder because they were up 50% in that group that year, and I was up 100%. So anyway, the XLE came in here. I said, geez, it's becoming incredibly overbought. The sentiment had become incredibly overloved. And no matter what, and everybody was bullish. I mean, and so it's like everybody, they're talking about $150 oil. And then people say, wait a minute, Matt, aren't you negative? Aren't you really bullish on oil? And I'm like, yes, but on a short-term basis, it's gotten way too extended. So we don't just look at the charts. I looked at the charts. It's become extremely overbought on the XLE and on crude oil. Also looked at the positioning. People were way too long. The futures traders had loaded up way too much on the commodity, crude oil. And sentiment among futures traders had become ridiculously bullish, 95% bullish. You rarely see those kind of numbers. So we came in on the, you can see here on the 8th, and we bought these put options. Again, exact date, June 17th, $90 puts. Waited a couple of days. They rallied in a big way up. They saw this huge spike here. We held on to them 500%, 560%. We sold half of it there. I thought it could go even further. It didn't. I started getting real nervous here. I was like, oh, geez, I should have sold the whole thing. When it bounced back, I sold it there. So our average price was over 500% on that.
The craziest one has been that FXI trade. I had people calling me, emailing me like, yo, Rodrigo, this is unbelievable. There were people, I'm not going to give out their usernames, but there were people that made over 6 digits on that one single trade. I think it was like 10,000, 9,000, some
Yeah,
crazy number.
it was 10. I mean, for the call, I'll just show you this trade right here. This happened in March, and you can see what we came in again, looking at a number of different things and using my experience. FXI, that's the large cap ETF. It says last weekend's chart because that was the chart I pulled up at the time. Obviously, it was last weekend's chart in the middle of March. But anyway, this thing had become the most oversold ever, but based on its RSI, most oversold ever. I've only seen one other thing get down below, get that low. I'm sorry, the RSI. What is the RSI? This is, again, it tells you when a stock is or an ETF is getting very overbought, oversold. When it gets down to 30 here, that's green that says go ahead and buy it. Go ahead. It gets up to 70. That's the red line that says stop. Don't buy it anymore, or short it. And here's a situation where not only get oversold, it got ridiculously oversold. And remember all that negative stuff that was going on in China last year, where they kept cracking down on all these. Each month there was a new industry they cracked down on, and then in here the stories came out that the U.S. was going to delist a bunch of names. It fell out of bed, and I said, "There's no way this can go on any longer." And I also knew that when the Chinese government, that wasn't just buyers would come in, that the Chinese government would come in and support their market because they'd lose too much face. Well, sure enough, the next day, rallied 25%. Next day, huge rally. Think about the S&P 500 rallying 25%, 27% in one day. And this is the options we bought. We bought the FXI, March 18th, $30 calls. Okay. This made almost 3,000% near the opening. I didn't sell it right at the opening, even though it was up over 1,000%, because I knew the government would keep buying. It got up almost 3,000%. I said, geez, we can't get greedy here. I do think the government's going to keep buying it, but let's not get greedy. And we sold half. Okay. And then later that day at the close, I said, okay, we're up almost 8,000%, 8,000%. And we took our profits there and the rest of it. That was what I did. Other people in the spot in the chat room held on until the next day and made, I think, as one person said, they made as much as 14,000% on their mind on this call. And again, it was a situation where it was so ridiculously oversold, and I knew that the political backdrop wouldn't allow this thing to fall any further. So that's why we're able to do it. So I'll just give you a couple more examples real quick here, ones just more recently, because I don't want to bore you by overshooting it here, but this whole thing with we don't just talk about stocks, and we can go into the commodities market. Wheat, that is the ETF for the wheat for the wheat commodity. Okay, it came here, it was becoming incredibly oversold. All those commodities had sold off hard, and of course they've stayed down, but they still can bounce around a little bit. So sure enough, we came in. Now wheat, again, this is an ETF. This is not the actual commodity. It's the ETF, WEAT, July 15th, $9 call options. Sure enough, we bought them here, sold them here, 250%. Thank you very much. Not bad for a 3-day trade, right? A TLT, same thing in the bond market. We've done that several times this year. The TLT, we saw that the bond market was getting oversold. Rates were really getting high. We came in on the 8th of July, 200, almost a 300% thing where we bought the July 15th again. It give you the exact date and the exit point. When this thing popped up, I said, bond markets usually don't move this much. Let's take advantage of it now. Again, we left a little bit on the table. I don't care. I was like, when you get a big move overnight, take advantage of it. That's what we did. And again, just see, this was what happened. Again, I'm not going to claim. I don't want to jump the gun here because I didn't actually trade. I kept saying to people, "This is a good one I'm looking at. This is a good one I'm looking at." I think some people in the chat room took it. I'm just talking about this week. What happened yesterday? Okay, if you bought those here, you made 800%. And I'm just being, if you didn't go all the way, I'm just like picking some spots because we were talking about this in the afternoon, and then I just chose that as a spot because I have to admit I did not do that trade. Like I said, there's been several other trades that have worked out really, really well for other people that people told me about, asked me about. I told them, I think it's a great trade. I'm going to hold off for now. And I missed it. This is one I missed too. But I guess my point is that we really try to get into the
right.
Yes. So that's the thing.
So basically, for everybody that's kind of just tuning in or watching in, basically these are the trades that Matt is doing live Monday to Friday with entries and exits. You really don't even need to be like, all you have to do is buy the contract he tells you when he says to buy it. And he tells you specifically, it's a small position. I'm adding, it's becoming a little bit of a larger position so that you can also do that risk management. He'll also do like, I'm taking half now and I'll let the other half right out, risk management, those sort of
Right.
things.
Exactly.
But
That's what.
also, let's not forget here, Matt, there is a lot of education that you bring into the table. It's not just about the trades and making money, even though a lot of people join for that, but there's a lot of education that you provide about the current markets, especially nowadays where there's so much mistrust in the media and mainstream media when it comes to what's happening with the economy, right? Redefining things. And I guess that's really where a lot of people appreciate your insight, because you do have you know, that straight up approach when you're trading, and that's ultimately what the members are there in the chat room to trade and beat the market, right?
Right.
Regardless if it goes up or down.
Right, and that's one of the things I really try to focus on when we do have this a Zoom call that we do every Tuesday at 10:30 Eastern time, and it's something I thought would be 15, 20 minutes, and it kind of started that way, but it quickly evolved into something longer, and where I go for basically a full hour, even sometimes more than that. But again, later this month, if we go right before the week before Labor Day, maybe that'll be a short one, because I'm not going to waste people's time and talk for an hour when there's nothing if there's nothing really going on. I don't want to waste your time. I'll be here all day, but I mean, I don't mind, and I love to talk, as you can tell. So I'll be there if there's something to say. But if there's nothing to say, I'll talk for 20 minutes and we'll move on, or but we talk about educational things, and that's the thing. And we start at 11:30. This week we talked about what really constituted a head and shoulders pattern. There were some people that asked some questions about the semiconductor index, and if that was something that was trading. So that again, so that's what we. That's what we do. Anyway, so the whole point is there's just so many things going on. Whether it be there's so many things that are counterintuitive to many traders who try to trade on a regular basis in the market. They see something moving and they say, well, it's got to go higher. If everybody's talking about it, it's got to go higher. Well, if when it gets to the point where everybody's talking about it, that means everybody's in it and it's too late. And you want to actually short the play, but you also have certain relationships with things. I mean, one of the things we've made some really good money in this year is playing at Home Depot. It's funny, I haven't had that yet more recently, but we have earlier in the year, and we used it by looking at lumber and looking at the price of lumber. And right now, I'm looking at the Home Depot tends to trade with the price of lumber, and frequently lumber is a little bit of a leading indicator. So if it rolls over, we want to buy some puts in lumber. If it starts to bounce from a low level, we buy calls in that play. So that's really what we're trying to do on a regular basis, which show out things that people don't necessarily look at. I mean, right now I'm worried. Everybody's worried about the housing market and the bounce and these. Well, let's move on. I'm going to move over to my Bloomberg. Bloomberg page so you can see that. And people are worried about the housing stocks, and it's like well, I mean, they got hit hard, but they bounced back now. What are they going to do? Okay. They see now again. Remember, I talked about that RSI, the relative strength index. Okay, it's getting overbought. Okay, but it can't seem to break above and make above and make a nice higher high. It's very basic but very important. When stocks are making higher highs and higher lows, that's positive. When it's making lower highs and lower lows, that's negative. Well, it's made of serious. This is the ITB Home Construction ETF. Okay.
I don't think you're sharing that screen you're trying to share, Matt.
Oh, I do have to change it. Okay. Let me.
It's showing Lab U right now.
Okay. Okay. Let me go to here and private chat. Okay. Let me go to share and share. Oops. Oh shit. Okay. Whoops. No. Okay. Share. Sorry. Share screen. Okay.
Yeah, we'll get to SPY, Eric. Don't worry. We're going to go over a lot of things here in the market.
Yeah. Okay, so this is definitely a different. So what do you? Can you see anything right now?
No. You have to. Well, we have to just share it again. The same thing.
Okay, let me system preferences. Okay, chat. That's not what I want. Okay, share.
Yeah, and really quick here, Matt, I'm getting a lot of emails from some of the folks here about the chat room. In the meantime, while you get that set up, I'm just going to go
Oh,
over some of these questions about the chat room. All right, just so
okay.
that just in the meantime, while you get that set up, again, these are questions from you guys, the viewers. So thanks a lot for sending them. So first question here we got from Phil. What is the schedule for the trading room? Phil, that is Monday to Friday, 9 to 5. Yeah, 9 to 5 p.m. Eastern, and that's every day, Monday to Friday. Are the sessions on Tuesdays recorded? The member sessions? Yes. Good question there, Joanna. Does everybody that joined get a free laptop? Yes, until midnight, you do get it. um, money back guarantee. Yes, we do have a 7-day money back guarantee as well. The price at renewal is the same as it is today. I think it's like 70% off. And yeah, I believe that kind of covers all the questions. If you have other questions, just reach out. We put the contact info there so that you can do that. And I believe we have Matt. Well, let me know when you're good to go there, Matt.
You see it? Can you see my Bloomberg screen right now?
Yes. I want to give a quick shout out here there to Barry. Want to give a shout out. Welcome to the chat room here, the most recent member. Let's go.
Great to have you here. Great to have you here. Anyway, so this is what I was talking about. If you can see the ITB, if you can see up here in the upper left-hand corner, that's the symbol for the.
I think right now you're sharing the Bloomberg screen.
Yeah, so you can't see the my ITB chart.
No, we can only see the Bloomberg page, that where you have your mouse now.
Yeah, I don't know what to tell you. That's the new system is not set up for to see my whole Bloomberg. I guess. Let me try to do it a different way. Hold on. All right, so hopefully this will get up. 9WT. This is the way they do it. Try that. This is just unbelievable.
Right now, it's showing like a Google page with Bloomberg that says like a Google search page.
Well, I don't know how to tell you this, but that's when the choices it gives me does not give when I my this is what I'm looking at and what I've clicked on in this new system are it says share screen. Oops. Okay, I'll go back to share screen, window. Okay, let's see if this works. Now, how about now? Do you see a Bloomberg thing?
No, right now you're not sharing the screen, from what I see here. All right. Yeah, it looks like it's showing the screen now.
Okay. Okay. Well, hopefully, let's get back to this now. Sorry, I just did. This is a brand new. Sorry, it's a new system they're using that I'm not used to. Anyway, the things going on here. This is the ITB. We got the again, this home construction ETF. People are concerned about it. What's it going to do here? I've been talking about how we can have all sorts of big opportunities right now, but it's like, well, why don't you just go buy the individual stock? Well, the individual stocks, the ETF, sorry, the options are very illiquid and they have a huge bid-ask spread. And so it's just not worth buying those things. It's not worth buying the options in the ITB. But one of these things is going to happen here in the next couple of days. It's either going to break out this thing to the upside, and I'm going to buy some calls, or it's going to fail and it's going to roll back over, which a lot of people are concerned about because it is overbought. Okay, so wait a minute, Matt. You're going to buy calls and puts. I thought you just said they're too wide of a spread and they're too illiquid. Well, they are. So the one we're going to, Home Depot, which is in that ETF, is very okay. Boom, boom, boom. Here it is. Now, look at this one again. Overbought. And very similar to the ITB. These lines here, these colored lines, those are moving averages. I'm going to take them out for right now. And again, we're going to show you here how this thing, if it can breaks out, see how it's been see how this level here has provided resistance for also, again, for several months here, 3 or 4 months. And it's right here at the 317 level. Stock traded, closed at 307. It looks like you can even say this is a head and shoulders pattern. Here's the left shoulder. Here's the head, kind of a minor right shoulder. But if it breaks above that 317 level, it is going to run. And I'm going to be buying calls on that. If it fails, there's nothing the more, again, it's getting overbought. So I'm a little concerned about it here. If it rolls over, we'll be buying puts. I'm not ready to pull the trigger at this point, but we're going to do it at some point soon. And again, you don't want to jump the gun because I don't know which way it's going to go. People always sit there and go, well, it looks like it's going to break out, and then they jump. Like I said, it's a resistance level for a reason. People keep coming in at 317 and selling. At some point, the sellers will say, I'm not doing it anymore. And when the selling dissipates, the stock takes off. Okay, that's why technical analysis is important. It's not just a bunch of lines drawn on a machine, on a chart. Okay, it's real. There are real issues here, and it means that's where the selling pressure is. And finally, when you break above it, the sellers finally say, okay, they've just run out of stock, or they've decided I'm not going to sell anymore, and that's when the thing takes off. Here, though, if it does get up to 317 and rolls back over in a significant way, if it makes a little lower low here, then we're going to pay we're going to look to hold on a second here. We're going to look to buy some puts in the thing and take advantage of its overbought condition so we can make some money. Now, I want to show you something here. Equity. Here's another chart that they'll be looking at here. This is called the MACD chart. And again, I'll just take away some of these moving averages because they just make it too busy. But this is the 200-day moving average. Okay, now this is what we call the MACD chart, and what that measures is the 9-day and 12-day exponential moving average. Now, a lot of people have heard about the golden cross and the death cross. A golden cross is when the 50-day moving average, a rising 50-day moving average, crosses above a rising 200-day moving average. That usually tells you the trend is going to really take off from there. And obviously, when the 50-day crosses below, it's the death cross. It's negative. Well, this is very similar, only on a much shorter term basis. This is when the 9-day moving average, exponential moving average, rises above or below the 12-day. Well, look at here. See how this thing, it's getting close to a negative cross. So there's another reason I'm leaning to the negative side, but I want to wait to make sure, see it happens. See how when it took place here, how much the stock sold off? That may not look like a major decline, but let's look at the percentage move. Bang, bang, hello. That's a 12% decline. Stock goes down 12%. I'll tell you right now, those put options are going up a lot more than, they're going up more than 100%. But see how the negative cross took place here. Again, another big decline. Negative cross here, another big decline. Negative cross here, not as big a decline, but now here, give us some few. You always want to make sure it's a clean break. But you can see these are the types of things that we're constantly looking at. Now, I'm going to look at another thing here. Okay, talk about what we have and great opportunities that are coming. Okay, this is actually, I'm going to look at everybody listens to yield. So I'm going to look at the yield on the 10-year note. Okay, this is the U.S. Treasury 10-year note. Okay, let's get rid of these moving averages. Boom. Okay, this is a classic head and shoulders pattern. Okay, boom, right there, right? Here's the left shoulder. There's the head. These are interest rates, remember? Remember, they go the opposite direction of the price. The yield on a bond goes inversely to the price. I mean, that's a rule, and it's not just a rule of thumb that that usually works. It has to work. It's a mathematical rule. Okay, I mean, that's just a little educational thing here for some people. They've known it for a long time, and it's a very easy concept, but some people don't, because they don't know it. And the reason is, just think about it. When you buy a bond, you buy a 10-year bond, you buy it at what they call par. It always is $100 when they first issue it. You pay $100 for it, and let's say it has a 10-year yield. Okay, great. So every year for 10 years you're going to get $10. You put in $100, you're going to get $10, a 10% yield every year. It's actually going to come in two payments, but that's what you get. But what happens over those 10 years if the price of the bond goes up? It goes up to 110. Okay, you paid 110 for it, but you're still only getting that 10-year coupon, $10 coupon. All right, so $10 on 110 is less than 10%, right? And the same thing the opposite. If the price goes down, it goes to $90. Okay, then you buy it there. You buy it in the open market. You buy it there. You're still getting that $10 coupon, but you're only paying $90 for it. So obviously you're getting more than a 10% yield, and so it's a mathematical thing. So anyway, here we are with the yield, and we get head and shoulders. Here's the left shoulder. There's the head. There's the right shoulder. It broke slightly below it. If it continues to break below it, that's going to be a very significant signal that interest rates are going to go lower over the next few weeks. However, it got below it and popped right back to it. Okay. And again, whenever you break an important support or resistance level, it always has to be done in a meaningful way. It can't just get a few pennies above or a few pennies below. We want to see that real move. Well, here it got a little bit below, then it got back above, and now it closed basically right on that line last night, right on that line. And guess what? Tomorrow we have a very important employment report coming out. And if that number is really, really strong, which will say that the Fed is they've been talking all week that that the markets have misunderstood what Chairman Powell was saying last week. And when everybody took it as really, really dovish. Well, we had all sorts of Fed speak this week where they came out and said, no, we're going to, we want to get it down to 2%. We're not even close to done raising rates, et cetera. People just don't believe them. They think the economy is going to slow down too much, inflation is going to come down too much, that they're going to have to shift their gears quickly. Well, tomorrow, because one of the things they've been talking about is the employment picture. If the employment picture is still strong, that means that they're not going to raise interest rates, and that means that the Fed speak we've gotten this week is accurate, and the Fed is going to be able to stay hawkish for a longer period of time. That's going to disrupt the bond market. The bond market's going to go. The yields are going to take off. That's probably going to be negative for the stock market. Now, the reason why I went over that difference between price and yield is that the yield on the 10-year note, the price on for the ETF is the TLT ETF, and that measures price. Okay, that measures price. So it's going to have the inverse. Now, if yields are going to go up, if yields are going to go up, the TLT is going to go down. I don't know if that's going to happen. Well, let's wait and see. But again, this is what we call an inverse head and shoulders pattern, because obviously, if price and yield go in the exact opposite directions, it makes sense. Here's your left shoulder. Here's your head. Here's your right shoulder. And if it fails, it's going to get clobbered. If the numbers really weak, and people say, "Oh my gosh, the economy is really getting weak," the Fed is going to be able to pivot much earlier. Then this thing's going to break out to the upside. And so I guess my point is, we don't trade in yields. When you don't trade the yield, you trade the price, because that's what they trade at. So you can't buy the bond yield. You can buy the bond, and the bond trades and its price will go up. So my point is that if it's a real weak number tomorrow, we're going to be looking to buy the TLT. We think it'll rally, taking yields lower, and we'll buy options in the TLT. If it's a really strong number, we'll probably buy puts. Now, let's say so again, a real key juncture for the bond market. What about the stock market? We're just looking at the same thing. Okay. This is the S&P 500 index. Whoops. S&P 500 index. Hold on a second here. Oh. Sorry. Okay, now here's the S&P 500. Now it's obviously had a rough year. Let's get rid of some of these lines so it's not quite so busy. And oh no, oops, I'm gonna leave that one. Cool. Okay, so here we are, and let's go back to the beginning of last year. Okay, now this green line is the 100-day moving average, not the 200-day, which most people look at, or the 50. It's a 100-day. And first of all, just note that the RSI, the Relative Strength Index, is overbought, right? And see how when it got overbought here, boom, it got a little bit overbought, sold off. Now it got more. It's not as overbought as it was back in November, so maybe it can go a little bit, it can go a little bit higher. But we're at a really, really important level right now. Okay, the hold on here. I'm sorry, just okay. Oh, great. So my 92-year-old father just sent me a picture, so that was great. I'm sorry. So here we are. We had this big sell-off this year, but look at the 100-day moving average. See how it was kind of provided support here? I should go back a little bit further into 10, 20. Boom. See, it provided support here at the end of 2020, got down to it here, held, got a little below it, held, got here, held. When it finally broke below it, it really got hit hard. Okay, that's why it's an important level. That old resistance, that old support becomes new resistance. So now it's going back up, got a little above it, failed, came back down hard. Got a little above it, failed. Got right to it, failed. Now it's a little above it again. What's it going to do this time? So again, we're at a key technical juncture. Here it got a little bit of above it, just like here, I'm sorry, right now it's a little bit above it, just like it did here. If it fails, it's going to roll over hard again, okay? And it's probably leaning that way because it's overbought. But if I'm wrong, and this could happen as early as tomorrow with a big number in the employment data, or next week, next Wednesday, we get a big inflation report. If it goes the other way and finally does break above it, remember what it did when it broke below it, it really got, this thing's going to really take off. So what we did today, and actually we did the same thing. We actually did one more reason to think that it's this is a key level is because see how that, again, it's trying to make its first important, it's made a couple of minor higher highs and higher lows, but hasn't made its first real important higher high. So if it can break above that, that's going to be important. In fact, you could drag this line and take it all the way back to here. Okay. And you can see that, again, old support becomes new resistance, and it's new resistance. So there's the 100-day moving average. We have a key level here, and I'm sorry, a key level to break it to a higher high. So the next, could be tomorrow, in the next few days, this is going to see a big move. And because the SPY, which is the ETF for the S&P 500, trades on a very liquid basis, and so do their options. We can buy the ones that expire tomorrow. We can buy them in the morning. We can buy the ones that expire on Monday, Wednesday, whatever we want to do. Once we see the big move. Now, what we did going into today is we bought it actually in the QQQ, which is facing a similar situation, which is actually broken to a new high already. Again, the QQQ is the NASDAQ 100. It's already made a get rid of some of these things so you can see it better. Bang, there we go. And again, the 100-day moving average, it's getting a little bit starting to break above it. And it has made a higher high, but it's getting overbought. So tomorrow could be a really important day. And what we did, because the market's overbought, and because we have a big number tomorrow, we went out and bought a strangle. In other words, we bought some QQQ. It was actually the TQQQ. We bought both a put and a call. And it was a strangle. Did I say strangle? And I'll just show it to you here. QQQ. And they weren't expensive. With the VIX low the way it is, you see here, we bought the $35 call and the $35 call and I'm sorry, take it back. The $35 put and the $37 call, both that expire tomorrow. Now let's just put the options up here, and you can see, right here. You can see it. Okay, see this? These are the strike prices. We bought the $37 call. It only cost us, 30. I think we bought it. I think I actually bought it 28 cents. It must have closed slightly higher because the market did bounce literally in the last 30 seconds. So we bought those, and then the 35. These only cost about 30 cents. So I mean, and then you could do a straddle, which would be the same price, and close at $36. You could do the straddle, which would be buy the calls at 36 and buy the puts at 36. That would cost you 60 cents there and 70 cents there. So I hope you can see those prices in there. That's the bid and the ask. But the last sale is right here. Okay. And we bought the $37 calls, which closed at 31 cents. So these are very cheap. And with the VIX lower, that means that these indexes are cheaper. And sorry, these options are cheaper. And the whole idea is that what makes it so good for us is like, well, why would you do that? Well, we wouldn't do it if it was just any old day. You want to be very confident because obviously if the market does nothing tomorrow and it doesn't move big in one direction or other, we're going to lose on both of them. But what we're betting is that if the move will be big enough and we'll make 3, 4, 5 times our money, that we'll make, not only will we make a big profit on the winning trade, we'll make way more than we lost on the losing trade. So again, we don't do that often, but it's a way to say, hey, you're betting on both sides. If the market does nothing tomorrow, like it did today, we're in trouble. But the thing is, for me, is I'm not worried about it because today there was a specific reason why the market was so flat today, because everybody was like, hey, I don't want to make any bets in front of this all important number. So these are the types of things that we're looking at. There's so many different things that are going on. The SMH, this is the semiconductor ETF. What time are we on here? Okay. Same thing, just what we talked about. It's overbought. And, we all know how important the semiconductor index is. I mean, it's, they call it the new oil, although oil is still very important. But again, same thing. It's been making lower highs, lower high, lower low, lower high, lower low, equal high, lower low, lower high, lower low. Can it finally make a higher high? It's the same thing with the rest of the market. The S&P is testing its late May, early June highs. So is the SMH. What does it do here? Probably going to pull back. Is it a big pullback? I don't know. We'll see. But this is something where we're going to want to take advantage of this. If it breaks out, we're going to jump on it. Okay. Sometimes we can, when things get really extreme, on either overbought or oversold, or overloved or overhated, and especially when you have a combination of those. You can really make a play at an inflection point. Otherwise, we'd like to look to wait for these important areas to get broken. And right now, obviously, if it breaks out, because it's overbought, it's probably not going to run as much as it will fall if it's a really bad, if we get some bad news. And again, this whole situation going on in Taiwan, there's a good chance we'll get, most of the chips in the world are made in Taiwan right now. And so this is something we're looking at very closely. Now, another thing. Again, I just give you these examples that we talk about in our chat room all the time. I'm going to show you something here. Oops. S&P. Look at what JP Morgan. JP Morgan is the most important bank in the world. And
really quick here, Matt. I know that we were just here till 1, so anything that you want to do above, after 1. Well, not after 1, man. I mean, after 1 hour of this, full courtesy, just for everybody to know, right? Everything that you're seeing from Matt at this point on is really just him being courteous with his time, just for everybody to know. So anytime, Matt, you let me know, man.
Great. Well, we can do a bunch of things here, GPU, and a couple more things here. Oh, equity. Gosh, what happened? Huh. Not sure why that's not working, but it doesn't matter. Okay, just look at, I'm going to try it one more time. SPX. Oops. Okay, but don't worry. I'll be able to pull it up in a different way if I can't do it this way. Okay. Oh, there it is. Okay. Oh, shit. Okay. Anyway, obviously we can just see. Look what's going on in the S&P 500 in the overall market. We all know that the market's been rallying nicely over about the last 2 months, not full 2 months, but see this nice little rally here. And look at the KBE, which is the bank ETF. Okay, bank ETF RSI. Boom. That's been rallying nicely too. Okay, that's a nice rally. 14, 15%. Look at JP Morgan, the most important bank in the world. Okay. Equity. Stock's done nothing. It's been flat. It's been stuck in a very, very tight range. What the heck is going on with this stock? I'm worried about this. And it's like, and remember, I mean, Jamie Dimon, maybe the most important executive in the world, and he was, remember what he did. I mean, in 2016, we weren't that far away from the great financial crisis. And we had the stock market. Oh, we'll talk about gold, by the way, before this thing's over. And remember, so everybody was still worried. It's like, oh, geez, the market's down. It's down 15%. Are the banks safe yet? We don't know. And what Jamie Dimon came out and he spent $26 million of his own money to buy the stock. The stock and the market bottomed on that day and rallied straight up for the next almost full year. Okay. This time the market was down 15%. And what did he do? He came out and said, there's a hurricane coming, batten down the hatches. And then a couple of weeks later, they stopped their buyback. Okay, now part of that, having halted their buyback, that's part of the reason why the stock's been holding up. But it's like, wait a minute. It's one thing to be underperforming a little bit, to be going flat. I mean, it's one thing to be going up less than the rest of the market. But to be going flat when the rest of the market is rallying as strong as this is a big warning sign for me. So again, that's the intraday chart. Let's just look at the GP. Okay, let's try it again. Don't take a sec, don't worry. Equity GP. Bang.
Hey Matt, quick shout out here. TX W45, welcome to the chat room. Let's go.
Welcome. Thanks. Again, thanks for joining. I think you're going to really like this. But again, what I'm looking at is to see if this breaks down below that, makes a lower low, man, that is not going to be good for the stock market. It's not going to be good for the banks. And the reason why I mention this, and again, I try to talk about things. One thing that Rodrigo really brought up, and I haven't pushed enough, and I should, is this the whole thing about educational stuff. We try to talk about where again, remember I talked about how I follow the price of lumber to tell me what's happening in Home Depot. And the one thing that people talk about too much is the yield curve and the bank stocks. And the reason why, and they say, well, interest rates, higher interest rates are usually good for banks. That is true. Okay. But the reason for that is because if higher interest rates are going up, lower interest rates are usually staying down. Okay. The problem is sometimes higher interest rates go up, and the short-term interest rates go even faster. And you get an inverted yield curve. That's what happened earlier this year. And the yield curve and it's funny because even as yields have come down, they've come down at the 10-year has come down more. So we have an inverted yield curve. This is what right here is the spread between the yield on the 2-year note and the 10-year note. Okay, now let's go back in time. Look where this thing is. You got to go back to the great financial crisis to see a time where it was in as bad a shape as it is in right now. When a yield curve inverts, okay, and why, again, educational thing. Why is that good for the banks? Even if these yields start going back up, the yield curve could still invert further, just like it did earlier this year. Why is that important? Because the banks lend out at that long-term rate. That's where they collect money. They lend the money out and you pay your loan off every month, and that's where they collect money. And then they pay out money at the short-term rate to their depositors. They give them a little money for their checking account or their savings account. That's the short-term rate. So that's their net interest margin, as they refer to. And that's just making money, printing money. When the spread is wide, they just print money. When the spread is narrowed down, they make less money. When it's inverted, they actually lose money. Okay. So this is what I'm caring about. I don't care about where interest rates are going. If interest rates bounce back up, I won't say that's bullish for stock unless the short-term rates stay down. If they go up just as fast and the yield curve stays inverted, that's what we care about the banks in the bank stocks. And right now, that is negative. So this is what I'm looking at, and we'll be looking at in the next few days to see what I want to do with the next, when I say tomorrow and into next week, and maybe even after that, into that stock. Now, the other thing I will say too is JP Morgan is a high. is a high price stock, and a high price stock, it's a $112 stock, so the options are a little bit more expensive. Well, it usually trades in pretty good tandem with Bank of America, and since Bank of America is actually outperformed JP Morgan recently, that might be the better play. That might see how it's been in a sideways range, but for a shorter period of time. This one might be more vulnerable. So if I want to buy some puts, I may even look at Bank of America because to buy the puts you can see here, because it's a lower price stock. Again, the market's closed, so it's a little misleading, but you can see it's a 5 cent. They just have a 5 cent spread between the bid and ask. You see there's plenty of volume in these things, plenty of open interest. You can see 11,000 contracts, so there's plenty of open interest, and they're much cheaper. But if I did the JP Morgan, you see that we get options that are more expensive. And again, that's one of the reasons why we love the fact that Amazon and these other stocks have split. You see how you got to pay, in line here, you get $112. You got to pay 89 cents instead of 30 cents. And that's why we like, Amazon, when it was trading at $2,000, those you couldn't buy very many options. And I always like to be able to buy several options. You maybe buy 10, maybe you buy 100, maybe you buy 2 or 3. But if you just buy one, then it's like you have one buying point and one selling point. That's it. And if you have 10, you can sell 5 at a level. And see, geez, I made it as private. I think it can go higher, but I'm not really sure. I'm going to sell it here. And let's face it. We want to use those, good risk management. If your options have doubled in price, if you sell half, that means okay, I bought them for $100. I went to $200. I sold half. All right, that means I got $100 back. Everything else I make from now on in is gravy. So that's just good risk management. And so that's why we like to do that sometimes when we kind of move from different things. I don't want to keep you all too long, but I just want to say that the one thing that we really that I've talked about. Well, let me just bring up something here, and I'll just show you how. Again, next week I was asked to go on Bloomberg TV today. I just didn't. I was too busy. I couldn't do it. I was supposed to go on at 2. They asked me to go on at 2 o'clock, but I was just caught up with too many things. But here, you can see here I am. You'll see today at quoted. Well, gosh, quite a few times. And you can see here's some dates. Geez, I was quoted. I guess it was the same quote. I had a big quote. I'll tell you what it's about. But you can see back on the 2nd, back in late January and late July, I was also quoted. These are these Bloomberg, and I'll show you where it was. Bang, and did I go past it already? I think I did. Hold on. Oops.
So these are articles that Bloomberg puts out, and they quote you there.
Right. Exactly. So anyway, but the thing that they quoted me on here, I just want to pull it up here. I lost the connection. But okay. I'm going to here. Okay. Here we go. Oops. There we go. Yes, there's a very big this is so important right now. Very big mismatch between what the Fed is saying they're going to do and what the markets think they will do. And one of them is wrong. Okay, one of them is wrong. Now, I understand why the people in the marketplace are saying that the Fed is wrong, because they were dead wrong on inflation last year. Remember, they said inflation is transitory. They turned out to be dead wrong, and that caused some problems. So they're assuming they're wrong this time as well, because they've seen oil prices come down. They've seen all these other things come down. Oil, wheat. But the problem I have is that, and I think what the Fed is talking about, this is, most of these things are it's the first time since the 1970s, these, especially oil and food prices, are higher because of supply issues, not demand issues. Therefore, like in 1970s when they had the oil embargo, it didn't matter that the economy got weak. We had demand destruction because the prices stayed high, not because demand was too high, because the supply was too small. That's going to stay that way as long as this war is going on and those sanctions are on in Eastern Europe. Okay, so let's just look at here. This is the Bloomberg Commodity Index. Okay, it's great. It's great that it's fallen 15%. But guess what? I'm talking about, forget about the lows in the pandemic. Let's look at the highs before the pandemic. Okay. Bang. So it's great that all these things are way down. but it's still 44% higher, 44% higher than it was before the pandemic, not after. So people are still paying a lot more. They're not paying as much as they were a couple months ago, but they're paying a lot more than they were paying 2 years ago. And we know that credit card debt has gone way up. We know the personal savings rate has gone way down. The people try to tell you that the consumers in great shape are not telling the truth. Most of these guys on Wall Street are paid to be bullish. Okay, that's not right. I try to be as honest as I can on this situation, and the saving rate is back down to where it was at the very end of the financial crisis. Okay, people are yes, they're keeping their spending up, but the only way they're doing that is by adding debt. You can only do that for so long. They're going to start, especially when we get into the new school year. They're like, "Hey, had all that pent up demand. We went on our vacation. Next year, we're going to go. We're going to go to Cape Cod instead of flying to across the country or flying to the islands in the spring." Okay, so the point is, we have a lot of risks out there, but something's wrong. Either the bond market is wrong, or the bond and stock markets are wrong, and inflation is going to remain a problem, and the Fed is going to continue to raise rates. And if that's the case, the stock market's going to come back down. Now maybe the market is right. Maybe the Fed is dead wrong again, and the market's going to hold up. Okay, that's fine. So the market will go higher and we'll take advantage of it. Remember, I said we're at a key juncture. That's going to be determined in the next week. Again, we got the employment number tomorrow. We got Wednesday. We got the inflation number. We still have more earnings to come out, but especially that consumer. The end of the earnings season is always when the retailers report. We've already had a couple, of course, but we got more retailers coming. And if they come back in and say that the consumer is starting to pull their horns in, they're going to the bulls can't have it both ways. I mean, they say, well, it's going to be fine because the economy is going to, if the economy is going to slow, so the Fed's got to pivot. Well, that's fine, but pivoting is not the same as a QE program. Okay, the market has only been able to stay up at these really elevated valuation levels because of all the QE programs that they've had over the last 12 years, and of course we had it until last fall. Okay, now not only so, in other words, even if they cut back and slow down on their rate hikes, they're still going to be hiking rates. More importantly, they're going to be shrinking their balance sheet. Okay, the QT, quantitative tightening, that is going to continue. The Fed is not; they're not going to pivot completely. Another thing too is to say every single bear market and deep correction. Forget about just bear markets, but even a deep correction, every single one. Since 2000, since the great financial crisis, has needed an important change in policy to get this market to turn around and be sustainable. In 2009, it became the mark to market for banks. They no longer had to mark every single day the value of their balance sheets. That finally allowed the liquidity the Fed was providing to go to work. In 2011, when the market was down 19%, they bailed out Greece. The EU bailed out Greece, which was actually a bailout of the European banks. Okay, in 2018, we had a big change in Fed policy. They did pivot that time. In 2020, we had, of course, the Fed when the market everything shut down because the economy had shut down. The markets were freezing up. The Fed came in with all that liquidity. Again, a big change in policy. So far, and it didn't happen until those policies were announced. Not that they were speculated. Those change in policies were announced. That was when it finally turned around. This time we have had no change in policy. The Fed, people are just guessing and hoping that they'll do it. And like I said, even if they are, they're very unlikely to start pumping a huge QE program. And you cannot have that unless the stock market is cheap. Whenever we have a bear market, the market goes from expensive to inexpensive. We have not done that. The lowest we got was 16 times earnings. You go back 40 years, that is at best, fairly valued, not undervalued. Okay, so and again, you can't have it both ways. If you say if the economy is going to slow, that means all those earnings are going to have to come down. It's only beneficial for you to see a change. Okay, geez, I think the Fed's going to change policy soon. That only works when the market is cheap, because that's usually what happens when they change their. That's what always happens when they make that change in policy. It happens after the markets become cheap. Every time in the last 50 years. Every time. Okay, it hasn't happened yet. So that's why I don't think they're going to change policy. They just think because they've been they've learned that there's this Fed put and it's going to be there. And all the Fed is doing right now is making sure it doesn't happen all at once. That we could sell off. This is another bear market rally. I think we're going to see a pullback. But my point is, even if I'm wrong, we're going to be able to take advantage of it in both directions. I've kind of rambled on there, but I just want to talk about how there's no question. Everybody agrees. The bulls and bears all agree that there's a big divergence between what the Fed is saying and how the markets are treating it. Okay. Now, maybe the Fed will change their tune. If that happens, then the market will rally better, and we'll jump in with calls. If they don't, boy, the stock market's going to have to go right back down, and I think test the old lows, if not break below them. That's really, I don't want to go going on too long here, but that was just a really important thing to me. Oh, the other thing I did want to show you is this. What has happened so far? Well, you can say, well,
yeah, we can look at some tickers if you want from the chat. Well, let me know one.
Yeah. So people, if you have some tickers that you want me to check out, just throw it into the chat room there, and Rodrigo will give them to me, and I'll give you my opinion on these stocks. So what we want to look at here is the Fed's balance sheet. Okay, this was 2021, right? Right up here. Now, what happened here? People forget. Again, there was a rally at the end of 2019. Nothing got better. The economy didn't get better. Earnings didn't get better. What happens was in September of that year, the repo market, the repurchase agreement market started freezing up. So the Fed did a quiet QE program. They kept claiming it wasn't QE, but it was. I mean, they were buying securities, and that's what helped the market rally. Okay. Then of course the market sold off in early 2020, and then we saw what happened with the Fed's balance sheet, and then they just kept going. But it's like, well, wait a minute. Now the market has rallied nicely here in July, even though the Fed has been doing QT, right? Right? Actually, no. What they do is they give you these numbers. They're going to buy, they're going to sell $37 billion of securities every month for June, July, and August. And then in September, it's going to go to 90 billion, much more restrictive. So, but the thing is, and I'll zoom in on this. Look at this, bang. It's barely gone down at all. I mean, they barely shrunk the balance sheet at all. Okay, so those monthly numbers are only guidelines. It's what they want to average. So far, they're not even close. So what they did in July and what they did in August, what they did in June and what they did in July was nowhere near $37 billion. So if they want to average that, they're going to have to sell more than 37 in August at some point, and we're only a few days into the month. But that's going to cause all sorts of problems. Okay, and then when they go to 90, what are they going to do? Okay, so it's again, so don't take solace in the fact that the market's been able to hold up and even rally in the last couple of weeks, even after they started QT, because they really haven't started QT. They just haven't shrunk their balance sheet. So be very, very, very careful about this. This comes out every week, and we'll get a new number on Friday. Just so you know, though. It comes out on Friday, but it measures it from Wednesday to Wednesday, so it's 2 days old. But it doesn't matter. You get a good update, and so we'll look at that. But anyways, if there's some stocks or some ETFs, or even if you want me to look at a specific commodity like oil or copper or whatever, bond market, whatever,
right?
Tell Rodrigo what you're looking at, and I'll look at them.
All right, so we have a couple of here. First one from Mary. Real OG. I think that's a Mary from the chat room asking for Apple.
Yeah, this one. Well, one of the things that was so positive, of course, and again, I'm going to go back. Okay. Now, what we were talking about in the chat room a lot was like this really, really key level is going to be 150. Why? You remember, this was old support. Okay. And see, it got down to that level, bounced up 150, almost exactly 150. And so we said, oh, geez, it got down to 150 and broke it. Look what happened. It got hit hard. It went back up, retested. That old support became new resistance, and it broke. Boom, big problem. So now you're like, okay, what's going to do here? It looked like it was going to fail, and then it broke out and actually came back and retested that line, and off it goes. So that was really bullish. What does it mean now, though? So let's go back to the RSI chart. Relative strength index, and you can see it's getting pretty high. See how it's overbought here? Okay, just like it was here. Now it did get more overbought back in late last year, so it doesn't mean it can't. It also broke above its 200-day moving average. That's the purple line. Let me just, which a lot of technicians look at very closely. You can see how that was provided support back then. Now it's, resistance is broken out. So this is all looks very good. But my point is on Apple on a near-term, first of all, on a long-term basis, hold on. I mean, the free cash flow is just amazing. You want to hold on to the stock. But for trading purposes, I'm not looking for a big rally. And this thing will it rally tomorrow if we get a move in the bond market? Maybe. But again, it can rally a little bit more, but not a lot more because it's overbought. Let's just look at the weekly. I also look at the Bollinger Bands chart. Weekly's getting overbought, not bad. So again, the pullback only may be a couple of days, but especially at the end of a week, you can take advantage of it in the options market. I just want to look at the Bollinger Bands chart, and I'll explain that one. Again, this is another thing we use. Now, the one thing here I want to be worried about, a Bollinger Bands chart, it basically tells you, I try to keep it as simple as possible, but see this gray-green line? That is the 20-day moving average, not the 200, the 20-day. And the purple line is the 2 standard deviations above that 20-day moving average, and the yellow line is the 2 standard deviations below it. It's bumping up against that thing, which means it's overbought. However, as you can see, this stock can ride that line for a long time before it rolls over. It certainly did here, and it's doing so here. So that, again, it can go a little bit higher here, but if we get some signs that there's some bad news, this stock could go down a little bit for a short period of time. Again, you'll never hear me say this is a bad company, but it's trading at 27 times earnings. You think, well, 27 times earnings is great. Well, it's actually very expensive for this stock. So we need a little bit careful here. But to answer your question, I think the stock's getting ripe for a pullback. Ripe apple, very funny. But it may not happen until early next week. It may get more overbought, but it's getting to a level now where I'm getting a little bit worried about it on this RSI chart. And again, no stock goes up in a straight line. The greatest company, last year, 2021, it's a 30% average. It's got to take a breather at some point. That's 30% rally. Again, let me get rid of some of these lines so you can see that better. Boom. There you go. You can see it's up almost 30%. It's getting due for a pullback soon, and maybe it's just a very small one. Who knows? If this is a return to the bull market, I don't think it is. But if it is, the stock can bounce back nicely. But it doesn't mean we can't take advantage of it on a short-term basis on the way down. I'm not going to do that tomorrow, but maybe look at that next week.
And just for everybody to know, if there is a trade to be made in the stocks that we go over here, Matt will be following up if there's a trade to be made in the chat room. So all the members know that obviously right now he's not going to be giving out contracts and which ones, and all that stuff. We're just giving a general topic overview of the stock. And if Matt likes it, looks at the stock, he'll give out a trade in the live trading room.
Right, exactly.
Mr. Eric, patiently waiting. Thank you, brother. This guy is definitely there. AMD.
Yeah, Vance Michael, we've talked a lot about this one lately. Oops. Sometimes this thing freezes, but it only takes me 2 seconds to unfreeze it. So there we go. Okay. Again, like a lot of tech stocks, they're starting to get overbought. And here's another one. They reported disappointing earnings. The stock got hit for like a New York minute, and then it bounced right back. Okay, now here again, there's a lot of things to like about this stock. Because see here, a nice little mini lower high. I'm sorry, lower low. A mini higher low, higher high, higher low. No, I guess a mini higher, but we still haven't gotten that. We want to see if we can get that big higher high above here. Okay, that's going to really break out. My sense is it's probably going to have to pull back before it takes a run at that. For the simple reason is this RSI chart is getting extended. Now, what I do like here, as you can see, it's trend line. I'll tell you, it's gotten nicely above that trend line, so that's good. So that's bullish. But it's getting overbought. I think it's getting ready for a bit of a pullback. That's not the end of the world. But this is a great company, a great stock. But I guess I'm going to put it. Hold on a second. I'm going to go back just because most technicians really like to look at the closing prices, and the closing high here. I'll just put it. Boom. So, okay, 108.50. So we're still $5 from that. But my point is, I think we probably pull back a little bit, and maybe not to tomorrow. Tomorrow may get one more, and may get all the way up to that old high. It would be actually healthy for it to pull back a little bit before it tried to break above and make it a more important higher high. So if it gets up to there, I'll probably be looking to, because that RSI chart that I just showed you will get even more overbought, and I'll probably look to buy some puts for a pullback, which would be natural, which would be healthy. Even if it's going a lot higher, it would be better if it pulled back after it got up to this level. Then I'm talking about more than just a day or two. Pull back, digested the gains, worked off the overbought position, and then went and broke above that. And I'll tell you right now, that's because you play it both sides. Buy a few puts here, let them ride for a day or two or three at the most, and then if everything's looking good in the overall market, then you look to sell take the profits and go the other way. And what you would do there is you'd buy it, pick at it a little bit, and then when you get above that 108.50 level, you really get more aggressive, and off the thing goes. Whenever you get that breakout, and again, that's another. We talk a lot more about that in the chat room about the strategies of why it's not only is it okay, but it's very good to go ahead and buy something, buy more of something, even though it's gone up. Too many people say, I missed it. I was going to put X amount and I only put in half that. And so I missed it. No, go ahead, put the other half in. It's okay. I mean, professional traders do that all the time, especially mutual fund guys, because they got new money coming in every day. And they go, yep, I still love Apple. I'm still going to put money into it. So AMD, I think it's getting ahead of itself on a very short-term basis. So again, with this RSI chart, again, it got more overbought here. But remember, they were still doing QE, okay? Now that QE's done, I don't think it's going to get as overbought. I think it probably pulls back soon.
Right, right. And I'm just seeing here on the tape something that like AMC falling on plan for equity unit dividend with ape ticker. No idea what that is. Ape ticker, if anybody does know about that. Okay, so let's move on here to the next one. Tesla, interesting. I think they approved the stock split. Matt, I know you've been banking on this left and right.
This one it was kind of funny because I just said, if it's stuck, and it had been stuck between 800 and 700 and 800, if it could finally break above 800, it'll really run. And sure enough, it did. And now it's back. Now again, it's getting overbought. And you say, well, you got overbought here, but again, look here. I'm sorry. Let me get rid of some of these lines here because it gets so busy and so confusing there. Let's go back to here. Okay. Now, see again, 200-day moving average. Here we are. See how, again, it got below it, but only a little bit. Held it. Finally, it said, we ain't breaking below that. Off we go. But again, there was still plenty of QE going on there. Now, so now it comes down, holds it, breaks below it, breaks back above it. And finally, when it breaks it for good, it just boom, gets hit hard. Okay. But now it's back to that line again, and it's getting overbought. So I'm saying if you own the stock right here, I would take on a trading account, whatever, longer term, it should be fine. Although, again, it's, you might even take some profit. I don't want to sell the whole thing, but take some profits up here. I just think it's going to have a tough time. But again, yes, it got much more overbought, but again, we still had QE going on. Now we have QT going on. I just don't see it getting more overbought than it did here, and it's testing that 200-day moving average. I think it probably stalls out here. That doesn't mean it's not going to go back to 1,200 at some point. If the market rolls back over, I think the stock's going to get hit hard. So that's another reason why I'm worried about it, because I do think the market's going to roll back over. But if I'm wrong, I still think this stock has got to pull back. And that's true, of, as you can guess, of a lot of stocks. We've had a 12 or 14% rally in the S&P, a 20% rally in the NASDAQ, and in the huge rallies in these stocks. I'm sorry. Get that out of the way so you can see it better. But again, that 200-day moving average. It's right. It tried to get above it, failed. It needs to really pull above it. I think, again, it needs to get it needs to work off some of this overbought condition before it takes that another big move or attempt to break above the 200-day moving average. So I'm a little cautious on that right now.
Okay. All right. Interesting. Well, definitely, Matt, want to give you a big thank you, Matt, for being here with us. The retail community here, we understand, you have the experience in Wall Street, and obviously as retail traders, we appreciate that you coming out here, helping us out, navigate these markets. Any closing remarks on your end on the markets and why the folks should pop into the chat room?
Well, I mean, first of all, it's a money back guarantee, 7-day money back guarantee, and I guarantee you, and I really think that the next. I'm sorry, I was just looking at the thing over here, a note that somebody sent me, but I really want to get as the next week I think you're going to see some great chances, some great opportunities. Tomorrow, again, we got the employment number tomorrow. We have some more. We have those retailers starting to report in the coming week or two. And then, of course, we have the inflation number next week that everybody's going to be focused on. And that's going to continue to give us the kind of volatility. Again, we didn't have it for one day today for a good reason. People were waiting for the employment number, but it's going to come right back there. There's no dog days of summer this year. I guarantee you that. And will we get a few quiet days right before Labor Day weekend? Maybe, we usually do. But other than that, it's going to remain active. And then, of course, we get into the election cycle. And this is when you get volatile years. It's going to be just a number of great more opportunities in both directions. And like I said, we have the tools we can use. We take advantage of them. I just think it's going to be, again, if you have the time and you really have the interest in trading more actively, it's great to work with a team of people that we work in the chat room, asking people, and people are asking each other, asking me, I own this stock. Matt, wasn't your idea, but I own this stock for 10 years. What do you think I should do with it? More than happy to talk about it there, especially, I say, sometimes I'll say, yeah, hold on to it because it's a great company, but, buy some puts here so you can trade around the position on a very short-term basis, whatever. We do that all the time. But our main rule is there's no such thing as a stupid question. And we really try to help each other. And like I said, we get a lot of different ideas from a lot of people in the group, not just mine. So it's as Rodrigo likes to say, trading on your own is really tough. And it's not just me you're trading with. You're trading with a whole group of people that are watching the markets very closely and really give each other some great ideas and some great learning points. So I hope you look at it. I think the next few weeks are going to be just as volatile, and I'm not sure which direction yet. I think it's probably going to roll back over, but there are certainly reasons to be thinking that it'll go higher. And that's the beauty of it, is that we can wait and see how this thing moves and pounce on it right away. That's what we're going to do, and I think it's going to be very, 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 very profitable for us between now and Labor Day and beyond. So thanks a lot. I think Rodrigo's still there. If he's probably going to show you the chat room and stuff. And but good luck with everything. For those who joined, thanks a lot. I think you really enjoy it. We'll be on tomorrow, probably around 9 o'clock or so. Although tomorrow with the employment number, actually, I'm sure I'll be on before 9 o'clock because the employment number comes out at 8:30 Eastern time. I'll be on then talking about some things and reacting to the employment data and see starts talking about what we're going to do to take advantage of it and then look at next week's activity. So thanks a lot. Good luck with everything, and thanks, Rodrigo, as always. We'll talk to you soon, buddy.
All right. There you go, guys. Matt Maley. You guys seen him everywhere, but he's here with Benzinga in the chat room. Shout out there to Matt. Thank you, brother.
Thank you, buddy. We'll talk to you soon.
All right, folks. Well, now what I'm going to do is that I'm going to show you where the action happens. Okay, this is where magic happens. I'm telling you, this chat room has treated me well. Okay, I'm not going to get into the numbers and the specifics, but this chat room has definitely made me some good money. So I'm going to show you how to use it if you're already a member, or if you're trying to think on how to use this trading chat room. Again, keep in mind, it's a tool. It's a tool, and for many people, it's their only tool, because in a chat room you can talk about all the ideas, trade ideas that you can imagine. You can post pictures of your charts, talk with Matt the whole day, Monday to Friday, 9 to 5, get his entries and exits immediately, right? And you can pop this up on your phone, and we're going to be coming out with push notifications that are going to go out straight to your phone within like a month and a half. So that's something that's pretty much in the final stages of being pushed out. So for all the current members out there, and also for the people that join, right? Keep in mind, we will be adding that, and that's going to be for all the trades. So I'll tell you how I use it. You can use it however it works for you. I always have this open, right? There's a bunch of windows that you have open, right? You'll have Gmail, you have a bunch of stuff, Yahoo, or maybe like whatever it is that you're looking at. You're gonna have a bunch of open tabs, but honestly, all those tabs, what are they doing? It's just space on your computer. This tab, this particular tab window with the stock picks inner circle chat room actually makes me money. Okay. That's the difference between you checking your email or checking your Instagram or whatever it is that you're looking at. The difference between looking at that and looking at this chat room that is actually working to make money the whole day, that's really where I try to focus on, right? So, what you do with your time is up to you. But if you are trying to make money in the markets, I highly suggest that not only you try this chat room, but you try it, properly, right? This is what I mean. You have two channels: Matt's important messages and the inner circle chat. If you want to talk with all these folks here and talk about how their day was, look at their trades, post your trades, talk with Matt back and forth, you can do that. This is open 24/7. They're trading earnings. There's a girl named Tiffany there. I know that, like, I think a month ago or something like that, she got some puts. I think it was on Target, made like 4,000%. Then she shorted Ross, made like 2,000%. Look, there are people there that basically they're like mini Matt Maleys. Okay, they're like mini Matt Maleys. They've learned his way, and they work with him the whole day, right? So you basically get to understand Matt, his trades, the education behind it, and you can even replicate it in some cases, right? We see many trades like that Amazon trade, right, from a member. So members are learning and you can see their trades. And that's why we show you some of their trades so that you can see that we're pretty much trying to show traders how they can also replicate this, right? Of course, they get the stamp of approval of Matt. And really, that's, one of the benefits that you get, right? We have some really smart members there. I know several. I know probably I signed up like probably 99% of them. So I can tell you, everybody that is there in that chat room is 100% focused on making money. That's literally the whole point of the chat room. You get in there, you talk with Matt, or you just get his entries and exits. Now, putting aside the great community that we have there, of course. What up, James D? That's James Donahue. I know him. I pretty much know that's Corey H. What's up, Corey? I know pretty much all these members on a first name basis for you guys to know. We have over 100 members there. I launched this chat room with Matt Maley I believe it was about 11 months ago. I've seen this chat room grow from one person to over 130 or 40 people. And I think there's more. So this is an amazing chat room. The energy there is vibrant. Everybody there is ready to learn, trade, make money. That's really the environment that you do want to be around, not these pump and dump chat rooms like StockTwits or Reddit or Wall Street Bets. You can make way more money trading what we're trading there with calls and puts than all of those meme stocks. I promise you that. Just look at the numbers. It's right there. So look at Matt. This is his channel, Matt's important messages. When you get to that chat room, you're going to see that it's only him. Only he can post there. Why? Because we want it to be very easy to follow his trades in and out. That's it. In and out, trading the volatility. I don't think I mentioned this, but Matt loves volatility on the way up or the way down. It doesn't matter. We're unbiased traders. We can make money on both ways. And that's important for you to know, especially for the past, 8 months. It would have been good to know how you can make money even when the markets go down, and make money on the bounces as well, right? So it's basically like just a way of trading, right? He's been doing it for 40 years and you basically get to mirror his trades. It's very, very simple. I'm just going to go back here. Let me look at this nice trade here. Yesterday at 9 a.m., sold some of those calls. Nice, right? Kept selling. I mean, we all know what's been going up with the markets. He bought a couple of puts there. And just for you to know, Matt goes both ways. So, for example, if he has calls that are up, he feels the market might roll over, guess what? He sells those calls and buys puts, making money on both ways, ladies and gentlemen. This is how professional traders make money. This is why day traders or swing traders within like maybe a week can make those kind of numbers because they trade both ways. They're not just waiting magically for the bottom to be in, right? The other thing that you get, market commentary, very important. As you know, Matt is always on the news out there, Bloomberg, CNBC, Yahoo Finance, everywhere. Everywhere that you see, he's always there because he's a smart fellow. Now, his market commentary, you get it here included. Keep in mind, a lot of the stuff that he puts out here, maybe, he's probably not discussing it when he's on interviews, because when he's on interviews, I think they have like specific questions for him. In this market commentary that you get, it's Matt Maley freestyling. Okay. He's just freestyling. Sorry. He's freestyling the markets there. And some people were asking about QT, what it means, and all that stuff. Nice little lesson on QT, how it happens, why it matters. So it's very important to not just make money out of what's happening, but also to know and understand why it's happening. You don't just want to make money and be like, well, I don't know what I did. You definitely want to know what you did because you want to replicate, you want to finesse and perfection your strategy, right? So that's just how you can use the chat room in a couple of ways. The other thing, if you have this open, which I do the whole day, right? Because of course you're trying to make money in this market, you want to have these sound alerts on the top left, on the top right here. You can select them. If you see that thing like gray with the slash, it means that the sound alerts are off. And if you click this all and you see them yellow, basically that means that the alerts are on. So when somebody's posting a in any of these chat rooms, right? Like for example, I only have the alerts set up for Matt's chat room. Why? Because honestly, I'm just trying to get Matt's trades. That's it. And I'm sure there's a ton of people here that maybe have a full-time job or are busy, and they really just can't be engaging the community the whole day, which is fine. You can always do that, you know. But if you just want to get this for Matt's trades and just make the money, you know, that's fine. You can just put the alerts on Matt's chat room, right? But obviously, keep in mind the community is a great part of this. So, hey, it's always there, open for you. It's 24/7. We do have an international community of people from around the world, everywhere Australia, Japan, Europe, even in Nigeria, Canada, everywhere that you can imagine. Hawaii, there's a member in the Stock Picks chat room with Matt. So, it's open 24/7, and Matt's chat room is as well. So I just wanted to show you that, guys, really quick. And also, anybody that does sign up today will get 2 bonus items that I'm hooking you guys up with. You're going to see it on the checkout. And yes, you will get a free laptop if you join. Just make sure you do it before midnight, before this thing expires. And if that, I think that's everything, folks, for today. Big shout out there. Eric, what's going on, brother? I'll see you. I got your email. Jose, what's up, dude? Mike. All right, folks. So we're going to leave the contact there if anybody does want to reach out or has questions. If you do want to look into a lifetime here with Matt Maley, we do offer lifetimes just for today. You have to call in, though. Make sure you call in at that number. Thanks a lot, folks. Thanks for watching. Happy trading and stay safe.